welcome to the next section at IndiaBonds. My name is Vishal Goenka. I'm the co-founder. As you know, we always bring exciting companies, corporates, and education material on fixed income. And today, I appreciate being a Friday, all of you joining us. Very, very excited to actually introduce NJ Group. As all of us know, as we've grown up in finance, NJ Group has been a flag bearer, a leader in mutual fund asset gatheration in the country, and really a trailblazer and a leadership position that they've held for many, many number of years. And today, I have the privilege, and we all have heard of NJ, but today we have Mr. Neeraj Choksi, who's actually the N of the NJ and promoter founder who founded and started this company and group in 1994. He's a graduate in business management, a certified financial planner, and a certified trust and estate planner. Along with him, uh, very, very excited to invite Mr. Jaideep, who's director and CEO of NJ Capital. Uh, Mr. Jaideep has 30 years plus experience in BFSI. He's held leadership roles across internationally and domestically, worked with GE Money, Alimna Bank, Saudi Arabia Sovereign Wealth Fund, and been CEO for 5 years plus and a board member of NJ Capital. Why I'm excited is because you don't usually hear people from NJ coming on and talking about their business. I've actually been to the head office in Surat, a fantastic operation, great amount of people and number of people. And recently, NJ Capital issued its corporate bond, which was very taken up very well. And obviously, we'll hear more from both of them as to what NJ's plans are going forward. So, with that, I pass the floor uh, to the NJ team to share a presentation. And after that, we'll have a Q&A where you can ask your questions and answers and hear it directly from the leadership team. Jaideep, over to you to share the presentation.
Vishal, thank you. Good evening to everybody from us. And I will perhaps would like to invite Neeraj to share the journey of NJ as a group first. I'll share my screen for the presentation. And once Neeraj is done with that, then I'll talk about NJ Capital.
Yeah, Hare Krishna, and thanks, Vishal, for your generous introduction. As you rightly said, I and Jignesh, we started this company in 1994 as a first generation entrepreneurs. After our graduation, we started this business from Surat, and it was with a view to help people to grow wealth. India largely was putting money in fixed income, so we wanted there has to be a diversification in terms of the asset allocation, and equity is something which we thought is important to be held in the basket of an investor's wealth as well, in an investor's portfolio, to be very precise and specific. And that's where we started our journey. And coincidentally, the private sector mutual funds also had started at that point of time, and we realized that investing in equity through SIPs or through mutual fund is a very good way of participating in the equity market, rather than buying stocks on your own, where the markets are very volatile and you need a lot of time and expertise for doing that. Like in all the developed countries, the way in which the participation of retail is there in mutual funds, if you look at any data, any statistics, the GDP to the mutual fund ratio in India even today is still 20%, while in Western world it is an average is 70%, and in countries like US it is more than 100%. So it has been a mainstay of investment vehicle and a preferred choice of vehicle across investors. And when I say retail, it's not actually the retail, but even the mass affluent and the high net worth prefer to invest through mutual funds because they are a team of experts. And this is something what we realized initially, that it's a very versatile product. It doesn't only have equity but also debt, fixed income, and several other offerings where any need of an individual can get satisfied. And that's why we thought that we'll build our business in distributing mutual funds. Once we realized the power of SIP after a few years, that it's something very magical, and it has a huge compounding effect. If you hold your SIP for a few years, 5 years, 10 years, then the kind of corpus you get is it's immense. I mean, it's one cannot imagine that is the kind of wealth one creates. And that's why we thought that we want to promote SIP, we want to promote long term equity. And that's where we started our network. We thought that individually to go every household is extremely difficult. We need a lot of people to
Mm.
talk about the basic simple idea. And that's how we started our platform, which is NJ Wealth Platform. And it was by way of technology we started that. Technology was there to help people, to get every business, MIS, research, marketing. It's a 360-degree platform. So our business is very simple. We recruit independent financial distributors, and then we train them, we help them certify the examination which are required. And then in turn they go to customers and they do the selling. They offer simple products. We have a suite of products, and everything can be done through our technology platform. So as of now we have more than 50,000 such distributors active on our platform. And in terms of our assets under management, it's close to 280,000 crores. I mean, we have approximately 6% market share in terms of the equity AUM, and close to 2,500 crores of SIP, which is close to 9% of the market share in the SIPs which are going on a monthly basis. And then gradually we also went into insurance broking, which again, from a personal savings point of view, is a very, very critical thing. And we started our NBFC, where Jaideep is going to talk about that. Again, the purpose of NBFC was very simple, that we offer loans against units of mutual funds, where people don't have to, redeem their funds whenever they are in need of funds for a shorter span. And there are a lot of such instances where people need money for a few months or a few years, which can be easily paid by way of EMIs. And they continue to protect their investment, and over a longer term they can really make good money. And lastly, we entered into asset management business, where we are managing close to 11,500 crores. Actually, we started the asset management journey in 2010 with portfolio management services, and we got our AMC license in 2021. So that's been again where we are slightly different. We are a completely rule based asset management company, while the entire industry largely is active. We don't take active calls. Our rules are active in nature, but we don't take any decisions based on an individual. It is the model which takes the decision. And across all the things which we have done, technology has been a very, very core central thing, whether it is our NBFC or whether it is our distribution, asset management, insurance. Everywhere technology has been our key core strength. And we have a technology company which also is a payment aggregator. It has a payment aggregator license as well, and a huge team of more than 300 people, largely helping the group, and also doing some business with other few financial institutions, but it's been largely helping the group. So that's the technology piece, and that has helped us in a very, very big way. We have a foundation also where we try to promote education, particularly in the masses. And that's how the group is. As of now, no, there's no investor. I and Jignesh are mainly the owners of the business and our families, and obviously some of our key employees are holding the stock options, and some shares have been granted to them. So that's where the group is. As far as the total number of employees is concerned, at a group level we have more than 2,500 plus employees. And the good part is more than 500 employees are there for a period of more than 10 years now with us. So lot of our senior management have been the first job they started with us. So in this span of 30 years, I think the most important thing which we have achieved is more about trust. I mean, we haven't sold anything which was not in the interest of customers. Whether it is I mean, we never went into any leverage kind of products, or any structured products, or any such things where it was beneficial to us but not beneficial to the consumers. That has been the hallmark irrespective of our segment. I think this has been the core philosophy, the core vision of the group, that let's work in the interest of consumers. Everything will take place. I mean, our interest will definitely get protected if we follow this simple philosophy. So that's a simple philosophy. That, and when we say that we believe in spirit and not in letter, and there are several examples to prove that yes, this is what exactly we are doing. It's just not everyone will say that we work in the interest of consumers, but when it comes to NJ, we can definitely prove that. And I don't want to speak more. Maybe over questions we can take a few questions, but I will ask Jaideep will take you through the journey of NJ Capital. He has been with NJ Capital since the inception of the business. And over to you, Jaideep. Thank you.
So
Thank
thank
you,
you for that
Neeraj.
introduction. I'm sure we'll have a lot of questions. 30-year entrepreneur journey to build a leadership company in the country in financial services is truly admirable. But Jaideep, over to you to talk to us about NJ Capital and what are the plans.
So, in the introduction, Neeraj said that the NBFC business is part of the group. So, NBFC business started lending in June 2019. It's the same year we got the license from the RBI, and the same year we started lending. Post this, we've had 6 profitable financial years. We are now in the 7th one. At end of last month, we entered into the middle layer of NBFC. So RBI has scale-based regulations, and based on that classification, we became a middle layer NBFC as of December, when we crossed 1,000 crores in total assets. In terms of rating, we have AA minus rating. So we are a AA category rating both from CRISIL as well as ICRA. The NCD issue which we are talking of today is rated by ICRA, but we have AA minus rating both from CRISIL and ICRA. And for short term, we have the highest rating from both CRISIL as well as ICRA. When it comes to portfolio quality and the product, we are a nil GNPA company. So nil GNPA hai to NPA bhi nahi hai. So we may be one of the few NBFCs in the landscape which could perhaps take claim to something like that. And the management team of the company is a professional management team come with the right set of experience. Of these 3 professional management team members, 3 are on the board of the company as well. Neeraj did the introduction of NJ Group, and you must have realized that not just technology, but it comes with wealth of advantages that we have for NJ Capital. So we have a strong access to the group's capital. Group's capital as of mid of current financial year, H1 of 2025-26, stands at close to 1975 crores. So we have access to capital. Like Neeraj mentioned, the technology team is more than 280 employees. So we have access to a strong technology team, technology platform also, and far more importantly, established practices, whether it is in area of HR or in the area of compliance and things like that. So we benefit from that. As of today, the net worth is 285 crores. And loan book is getting closer to 1,000 crores, and total assets, like I mentioned, more than 1,000 crores as of today. So these numbers which are displayed on the right, they are as of 31st of December 2025, 9-month ended 31st December. We essentially have 2 products today. One is loan against securities. When we say securities, we don't lend against shares. We lend only against units of mutual funds. And under loan against securities, there are two formats of loan. One is pure play loan against security, which is kind of a cash loan, and the other one is loan against consumer assets. So where we lend against laptops and tablets and travel. So those are the products which we do in loan against securities. The other product is partner loans. The distributors, sub-distributors which we have, which Neeraj mentioned, we have more than 50,000 of them. We call them partners. And we offer them loan basis certain credit criteria, and we enter into a tripartite agreement to lend that loan between NJ India Invest, which is the flagship entity, the partner, and us. And the distribution of these products, so LAS of course gets distributed through NJ Financial Services, which has a tie-up with NJ India Invest. Then IFAs, which are outside the NJ network. And for consumer assets, we have something called as NJ EMI Store. This of course is for customers of NJ Group at the moment. And partner loans gets distributed through the flagship entity, which is NJ India Invest. Then if I talk of how has been the performance, the net worth has grown at a CAGR of 56% between 2019 and 25. And we will end this year at somewhere between 345 to 350 crores in the net worth. We over the next 3 years, we look to be in the region of about 750 crores in terms of net worth. If I talk of total assets have grown at the rate of 98% CAGR over the last 5 years, from 2019 until 2025, over the 6 financial years. So the period is 5 years. And we estimate that we'll get closer to something like 3,000 crores in the next 3 years time frame. So that is the number which we think will be headed to. Net profit in the last financial year was 21 crores, and current financial in the 9-month ended, the profit, net profit post-tax profit is 24 crores. This is, of course, these are provisional numbers. We are confident of closing this year at a post-tax profit of about 32 crores and above, and see it growing to more than 75 crores post-tax in the next 2 years after that. When I was talking of the distribution, so we have two types of distribution. In the initial year, the distribution was through the NJ Group's partners. And as of last financial year, 24-25, we had 5,600 plus NJ Group partners who had done loans, who had offered loans to their customers through NJ Capital. So basically, customers who are in need of loan reach out to partner, and partners then propose the loans of NJ Capital. Then in year 23-24, we also went outside the NJ Group and started enrolling independent financial advisors. Last financial year, we had 191 unique IFAs. This year, in the first 9 months, we have 211 unique independent financial advisors. At the same time, the NJ partners who are doing that business through us has grown to 6,000 plus, and we are confident that by end of this financial year, the current running financial year, we should cross about 7,500 unique partners offering NJ capital loans at the request of customers. This would be of interest to the investors. In the first 9 months of this year, the return on assets has climbed to 12.5%, and the return on equity has climbed to 12.5%, and return on assets is at about 3.5%. Of course, there will be equity infusion in this quarter, so this will sober a bit, but it will be in comfortable 11% plus band. That is where we expect it to be by the close of this year, and gradually thereafter increasing in the years to come. This, of course, is an annualized number. Now, to run this franchise, apart from the strong capital availability that we have from the group, We also are borrowing, and this is how the debt equity structure looks like. We are in a very comfortable zone even now, and like I said, there'll be equity infusion in this quarter, so this 273% will fall a tad bit, but even at 273% debt to equity, we are in a very comfortable zone. So who are lending to us and who are investing with us? So in private sector, we have absolutely marquee lenders, and some of them are really conservative lenders also. We have Kotak, we have ICICI, Federal Bank, HDFC, Axis Bank, and DCB. In public sector, we have State Bank of India, Bank of Baroda. In NBFC space, we have Bajaj Finance and Aditya Birla Capital. And in terms of institutional investors, we have done 2 tranches of NCDs. The first tranche, the anchor investor was SBI Asset Management Company. That was a 150 crore NCD issue. And the second tranche, very recently we've done, is 25 crores, which is AK Capital. So Vishal, pretty much this is about NJ Capital, and both Neeraj and I are open to questions which may be there coming in from the participants on this call.
That's great. Thank you. Thanks so much, Jaideep, for that presentation. There are some very basic questions that are starting to come in. We're going to roll, and some questions have been sent before. What is the full form of NJ Group? I think Neeraj ji mentioned they are the names of the founders, Mr. Neeraj and Mr. Jignesh. What is your CRAR? Jaideep, did you mention that?
No, I did not mention CRAR. So as of 31st December, it was at 22%. But like I said, in this quarter, we'll be doing equity infusion. In fact, as we talk, by tomorrow, there will be an equity infusion.
Oh, great.
So we'll close the year at something close to about 25%.
That's great. This is a first-time bond investor, I guess, got attracted by NJ name. I see AA minus, and minus makes me slow down, Mr. Venkataraman. That's not correct, because credit ratings are in 10 categories, from AAA, AA plus, AA minus. AA minus is a very good rating. It's a very high rating. Below that is A plus, A minus. It's just the way the rating structure in the country is. It's the 4th largest rating, and it's pretty solid out of the 10 ratings. Are partner loans unsecured?
So yes, partner loan by its classification are unsecured, but like I said, we get in a tripartite agreement with the NJ Group. So we have a fallback of getting the EMIs. So based on that tripartite agreement, we have the flexibility of getting the EMIs deducted from the commission of the partners and paid to NJ Capital on behalf of partners by NJ India Invest. We have 0 delinquencies over there, just to no GNPAs and no NPAs over there also. It's been now, this is the 5th year for partner loans for us
now. Who are your peers and competitors in this segment?
Okay, so I will bring attention to something which Neeraj mentioned earlier. Neeraj said that NJ as a group philosophy doesn't do any products which are not good for customers. In NJ Capital per se, I can count any bank and any NBFC which is in last space as our competitor. But there is a difference. We do only term loans. We only offer term loans for our customers. We don't offer the traditional flexi loans or overdraft products, because we feel that they are not meant for every customer. I am not saying they're bad products, but actually for larger number of customers, these are not the products. So we have taken that conscious call, at least in the initial years, that we'll be only a term loans company. So yes, we have competition banks. All banks are our competitors. Some large names like Bajaj are a competitor, but...
So whoever is doing loan against mutual funds.
But we are the only ones who's doing term loans, to my knowledge.
How do you recover overdues? I know you say it's 0 GNPA, but...
great question. One of the reasons our rating got upgraded from CRISIL A plus and ICRA A plus to CRISIL AA minus and ICRA AA minus, and we landed in AA category, was the fact that our bounce rates, the delinquents, the bounce rates of the EMIs is lower than some of the best HFCs, home finance companies in the country. Okay, so first of all, that itself is low, and in case the customer doesn't pay, we give a call to customer, we send reminders to customer. If that doesn't happen, then we sell the securities
Hmm.
and recover the money. So by 15th day, if the money has not come in, we sell the securities. But over there also, the sale of security rate is lower than 0.7% of the the EMIs to be collected.
Yes. No, very, very, very good on that. I know the answer, but the question, will stocks be considered for lending in future?
As of now, no. In fact, I don't think there is any plan to consider stocks most immediately. There's a lot of raw material available in the mutual fund space itself. Like Neeraj mentioned that, AUM to GDP ratio is still at just about 20%. So that segment will grow. Neeraj also mentioned that the group's assets under advice are close to almost 3 lakh crores. Let's say if they grow to a sizable number in times to come, and just about 2 or 3% of that is pledged to us, यहीं से एक 3,500-4,000 करोड़ की बुक अगले 3-4 साल में बन सकती है. So the need to really step out and do something else is not there.
I think you have potential clients. What is the rate of interest on loans against mutual fund units that you charge usually?
That actually varies. That varies. Shortest tenures are 6 months, where we lend at about 11%. And the longest tenures are 7 years, where we take it up to 14.5%.
Excellent. There's a detailed question on, and you can choose whichever part to answer, because this is really to our retail and mass investor base. Can you please elaborate on concentration level for top five borrowers? What percentage of the book is that?
Very, very small. It will be less than top five borrowers. Okay, top five borrowers, we don't track it per se as top five, but if I have to think of just about percent and a half to it's a very, very
Very
distributed.
diversified. Yeah,
Just to
yeah.
give you a flavor of this, maybe it will answer question better. The median loan is 1.3 lakhs.
Okay. Okay. So there's no concentration as such.
Hardly any concentration.
Portfolio split between LAS and unsecured partner loans?
95% portfolio is LAS and 5% is partner loans.
Got it. Does NJ have a bond? Yes, NJ Capital has issued a bond. You can get it on India Bonds, AA minus rated, currently yielding around 9.11. So yes, you could invest in that. Last consumption, last con, last against consumption asset seems to be a niche loan product. Is this secured against asset, or this product is given for funding purchase of consumption asset?
Okay, so it is given for funding of purchase of the asset. Asset is not hypothecated. The units are pledged, but it gives customer flexibility to go in for long-term loans also. I mean, just to give you an idea on this, say for example, laptops that get funded through NJEMI store, majority of those laptops are interest rate schemes. Typically 36 months is what they borrow for. Many of them go in for 84 months also. In fact, today only Neeraj, Jignesh, and we were discussing that the lowest EMI of a laptop on NJ EMI store is 452 rupees. So it's like saying कि recharge से सस्ता laptop मिलता है यहाँ पे. So
No, that's great. Average cost of funds from banks as such, where are you funding?
It's a very proprietary question,
That's
but
fine.
I will answer in a very different way. We are able to borrow at typically AA and AA plus the rates at which typically AA and AA plus entities are borrowing in the country. I mean, just to give some ideas, the lowest price term loan is below 8% for us at this point in time.
So you're being generous by doing NCDs at 9 plus.
No, actually, that's not the only purpose. Over a period of time, we wanted to diversify the sources of debt capital. So, कभी ना कभी आना था. Bank funding is definitely available to us.
Yeah, yeah, yeah. No, that's very good. People are asking, I missed the start of the presentation. Yes, it'll be available on India Bonds YouTube channel by Monday. So you could actually go through. It was very good introduction by Mr. Neeraj speaking about his journey. All right, let's look at how many branches do you have as of now?
So we are a digital platform. So we, Neeraj, there are two parts to this. Capital is a totally digital platform, and but the group has branches, and perhaps Neeraj may be the right person to talk about that. Neeraj, can I pass it to you?
Yeah, we have a presence in 97% of the pin codes and more than 200 branches all across the country. So the basically the we are trying to leverage our existing customer base, our existing customers who already are investors in mutual funds. Now, as and when they want a loans against the units of mutual fund, we are making it available on our platform itself, so they don't have to go anywhere. And the most important thing is it is an end-to-end digital journey. A customer doesn't have to sign a single piece of paper. He will get a loan instantly. There are some instant products also, like through the IMPS route, they can get up to a certain amount instantly. Within a hour or so, they receive the money. And that's the kind of comfort and convenience we offer. Generally, IRR may not matter in a very, very big way because these are all very small ticket loans. If you
Hmm.
look at our average ticket size, it is in the range of 2.75 lakhs to 3 lakhs. Now, in a 3-year loan, the EMIs are very, very small. So, from an absolute terms, the interest rate is not so high. So, that makes a very unique proposition for NJ Capital. It from a customer's point of view, he is more interested in getting the money immediately, instantly, with a very less paperwork, and that interest doesn't matter. And since ours is a term loan, normally what is happening in the market, that market has these loans which are more like an overdraft facility. So
Hmm.
whenever a consumer uses it, he is completely paying the interest on that. So we had done certain analysis also in the past in an OD kind of a facility. So as a distributor, we offer that through different other financials as well. So in that case, the selling of securities uh, was far higher than in case of a term loan. So ultimately, they end up losing their security because there are, whenever the markets change, I mean there is a fall, you'll have to put more margin into it. But in a EMI kind of a model, what happens that every month the principal is also getting repaid. Not only the interest, but the principal is also getting repaid. In an OD facility, no principal is getting repaid till the tenure of the loan gets over. So they are always paying 6 monthly, half yearly interest or so. So that's where I think this proposition makes it unique, and it is more for the retail investors, not for the promoters of the businesses who leverage, or they leverage in the stock market. That's not at all the purpose. The purpose is very simple, that if someone is buying a house and within that they want to do an interior, and for that they need some funds, or in the business, if there is a season where for few months they need some funds, this is the facility they can use, and they get that funded. So it's a win-win situation. So as I again re-emphasize, that our vision is very clear. We want to act in the interest of consumers. I mean, that's been the core thing and the paramount thing. So that's why from the capital side, branches are not so critical. Branch already we have, and these are the guys who are going to our distributors, sub distributors, 50,000 sub distributors, as I said, and through them these consumers come to our platform. So that's how it works.
No, that's great. Thank you, Neeraj.
Hmm.
Quick few questions, Jaideep. I think we'll go back to you. How much amount do you lend against mutual fund value of 1 lakh? So loan to value typically for a 1 lakh portfolio. I know it depends on which asset, but just typically, what is the range LTV offered? Yeah.
So RBI has pegged that at maximum 50% lending that can take place.
Okay.
Uh, we also keep in mind the type of funds that are the underlying asset. For example, sectoral funds, we may not lend up to 50%. We may lend up to say 40% or 40,
Mm.
42% or thereof. Uh, because what happens is that in case that limit is breached, because NAV fluctuates.
Yeah, exactly. That's the subsequent question. When in fluctuating NAV, what do you do?
When NAV falls, RBI expects that within 7 days we make good, either by selling the securities or asking customer to pledge
Mark.
more securities,
Yeah.
or
They
customer
have to infuse margin.
use margin difference. But
Margin.
one more thing here, another advantage that customers have with us: the moment first EMI is paid, the principal outstanding comes down.
Okay.
So rarely we have margin calls after the first EMI is paid. मतलब market को बहुत correct होना पड़ेगा for something like that to happen.
Yeah.
Whereas that situation can arise with any of our competition where they lend OD and a customer has used the OD to the fullest amount.
But
Question.
in case
Yeah.
of debt funds, we
Yes.
will lend far higher than
Yeah,
the 50%. That is only for the equity funds. The limit is 50%,
yes, yes.
as
Thanks.
backed by RBI.
And debt funds, what is the LTV typically?
We go up to 80%.
I go up to 80%. Very good. I think you're getting more clients saying, how do I get in touch with you if I need a loan against my units? As they said, it's a full digital journey. You can go to NJ Capital website, but anything else you want to add, Jaideep, to that?
So,
Someone wants to reach you, connect with NJ Capital for loan.
yeah, so for NJ Capital Loan, currently, like I said, it is distributed through two mechanisms. You can reach out to whosoever is your IFA. If he is not already the NJ partner, they can enlist with us and offer the loan to you. We are a B2B2C model right now.
Okay.
We don't do B2C at the moment. And if you are a customer of an NJ mutual funds partner, then anyways you have the eWealth account from which you can directly apply to
You
NJ.
can give your email ID so then we can get them
Yes,
connected to the
I can
right
give
people.
my email ID also, or an ID of NJ Capital where they can write to us.
We know who the client is. Obviously, he's a client, and we can forward that email.
All
Sure.
right, that
Mr.
will help.
Rajaram, we are very happy to connect you with NJ, and they will help you. Now you are getting partners. How to become NJ franchisee?
Okay, so
Uh,
that is
on the
easy. If
website.
you're looking at becoming a NJ mutual funds partner, then NJ's wealth platform, NJ India Invest Wealth platform, it is called NJ Wealth. That is the way you'll be able to find on the platform how to become a partner over there. But if you want to become a loans partner for NJ Capital, you can go on NJ Capital's website. You're seeing on the Capital NJ Capital website address over here. So there's a tab over there to apply and becoming a loans partner with us.
I did expect this question having Mr. Neeraj on the call. What is your view of the mutual fund market for this year, given the FI outflows and the SIP inflows impact? So, how do you read it? What's happening in the industry now, and your view for this year, overall market?
In last 30 years, I think the inflows in equity are directly proportional to the market. So as and when the markets have gone up, we have seen higher and higher equity flows. But in the last 5, 7 years, a very significant change has happened that the participation of retail investors has come through SIPs. And because of SIPs, irrespective of the fall in the market, the fall of their investments is far, far lesser.
Hmm.
So SIP in a big way is giving them a huge, huge kind of a market risk management. So people generally become fearful. People invest by emotions, become greedy when markets are rising. They become fearful when markets are falling. But when you invest through a mechanism of a SIP, you are trying to avoid that behavior because you are investing by way of discipline on a systematic basis every monthly small amount, and that will not shake you when the market falls. So I think that has been a great experience. And today if you look at the SIP book is 30,000 crores per month. It is far, far higher than what the FIAs are contributing. At one point of time, our market was dependent on FIs, as and when they were selling, the market used to tank or fall. Today, there is so much of geopolitical concerns, and so many things are happening globally, and markets are. But despite of that, we haven't seen a significant correction in our market. So anything to predict for a shorter term is extremely difficult, and we never give a short term view. But
Mm.
from a longer term story, India has a solid story. Our median age is below 29 years, and the youth of this country is going to be, that's going to create consumption. I think India is going to have a sweet spot. One analysis which was done by AMFI and PwC states that in 2047, India's GDP is also projected at $30 trillion, and our mutual fund industry also will become 30 trillion US. Today it is below 1 trillion. So there is a tremendous potential as an investor, as a business franchise, as a distributor, and so on and so forth. But I think the India story continues to remain. Anything can happen in the short term. 25, 30, 40% falls we have seen in the past. 60% fall I have seen three times in my tenure of 30 years. Yeah, so first was in 92, 93 when I just started my business. Second was in 2000, and the third was in 2008-9 during global financial crisis, and during COVID it was 40%. These are the drawdowns. So from the peak it has fallen down to such a level. So if you have a shorter term appetite to take that kind of a fall, then these markets and stay long term, I think one it has a very strong history, and I mean to create wealth, I think India is the destination.
No, absolutely. I agree with you. Matlab, sip karte jao. That's the right thing that they say.
Yes.
And markets can go up and down. I know it has been asked before, Jaideep, but a question, why do you need to do NCD of 25 crores when itself you're so big? First to the question, there are large companies who issue, and the government of India owns the biggest, but they still do bond issuances to expansions. So does largest banks in the country or companies. So, but I'll pass it back to you, Jaideep. I know you've answered, but for our audience, what is your purpose of doing this NCD, and where do you want, how do NCDs play a role in your expansion and growth plans?
So two things here. One, I mentioned that the group itself has a net worth of 1975 crores approximately at the at as of 30th September 2025. So the current financial year, half year. So group itself is capable of funding our needs at least in the near future. But we wanted to have this NBFC from the beginning in normal trajectory, how the NBFCs borrow and build the business. And I mentioned earlier in the presentation that we now also want to diversify the debt capital sources. So the plan is that over next 3 years, it will be good to have a 50-50 mix of banks and non-bank sources of debt capital. So as part of that, we started doing NCDs this year. And as we go along, the number of NCD issuances will increase. We wanted why 25 crores is because this is the first retail NCD issuance that we're trying to do through AK Capital and India Bonds, and we wanted to really understand this well. Also, we are a little conservative in our approach, so that's the reason we went with 25 crores here.
Absolutely makes sense. I think for our audience, typically we see companies when they first time come to the market, we would like to, start smaller issuances, get the support, talk their story. Just again, this whole recording will be available on our YouTube site from Monday, and there are a lot more people it reaches out to. The whole idea is for NJ Capital to have NCD issuance as core strategy, as Mr. Jaideep mentioned, and you will find them hopefully on our platform on and off. But great, some compliments, great structuring of your loan product. Appreciate the management's time and the way Mr. Choksi and Mr. Jaideep are building their business. I do not have any more questions. We usually like to finish earlier to save everyone time. And People keep asking when's your next NCD public issue. I think public issue is still some time away. As Mr. Jaideep said, they'll do a series of issues. First bond issue, public one is away. But thank you again. I think it's a pleasure, Neeraj, to talk to you.
Vishal, just before
Yes,
you close, I just saw one question which
yes,
perhaps
please go
I
ahead.
would want to answer. There's a question which has been asked saying that have you defaulted on any of your payments? We have not defaulted on any of
Oh,
our
I
payments.
never saw this. Where
Yes,
has it? Okay,
there's a
maybe.
question which says that have you? I just saw that question.
No, that's fine. Please answer it. If you see it, yeah, let's
So
go
I
ahead.
just want to tell you that no, we are good borrowers also. We have paid all our banks. All those marquee lenders would not come to us, and we would not get really great rates from them if we don't pay our
No,
dues on time.
yeah, so we have all kinds of, we have the whole exercise to educate the retail masses. Honestly, if they would have defaulted, impossible to get a double A minus rating in this country. You'd barely survive with a double B, triple B if you have a default record. No, so
Yes, the question was, has there been any default in payment of interest of any of the earlier bonds?
okay,
Any
no,
bonds or
never.
any payments? None, none. Sir.
Companies that have defaulted earlier on payments, with my knowledge, again, 20 years I've been in the industry, very difficult, almost impossible to be back at double A. NJ's great reputation. I wouldn't think that. When do you expect triple A rating? Yeah, if you want to answer that question, Jaideep, over to you. I, you just got upgraded, right, from A plus to double A minus,
Yes, we have moved from A category to double A category now.
which
So
is
actually, just for sake of audience, some of them who may not know, double A minus, double A, and double A plus, they are all counted as double A category. So we are already
that's
in
right.
category. Hopefully, someday we will be in triple A. We would like to believe that we are triple A because of the kind of business model which we have at this point in time. We are conservative. Portfolio quality is really good. But having said that, how the rating agencies rate, they also have a relative rating mechanism. Hopefully, if we are patient in terms of our growth story, we should reach there someday.
Yeah, I think some of you are trying to say we can see your questions. No, we haven't. We try to answer as many questions as possible, and we haven't seen questions. You can always write to us later. We'll forward to Jaideep. Uh, okay, one question. Yeah, I saw your question now. It says, uh, I think it's a basic question. Coupon is 875, yield is 911. Why, without any credit rate disturb, bond price should increase? But no, it's not like that. 875 is the coupon, but it's a quarterly payment structure. So actually, it gives you slightly higher yield. It's bond math. Kamal, I recommend you should go on our website. There's a lot of educative material there. Attend one of our next education series on bond price and yield. Typically, a coupon with a quarterly or a monthly payout has a higher yield than the coupon itself, right? So the price doesn't go down as such. Yeah. Great. I think with that we will wrap up this session. It's Friday. We really appreciate our all our clients and the audience to be here. Thank you, Neeraj. It's great pleasure to get to know you over this call. And Jaideep, great business you're building. We hope to see more NCD issuances from you. For our investors, if you're looking to engage with NJ Capital NCDs, they are available on India Bonds platform for you. Minimum denomination is 1 lakh. We're seeing a lot of interest. Nice, stable, double A minus company. Please reach out to us. Thank you, everyone, and have a great weekend.
Thank you
Thank you. Thank you. Thank you so much.
so much. Have a pleasant weekend.
Yeah. Thank you.
Securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.